All right, what's up, everybody? Welcome to the High Performance Trader Live Weekly Recap. We're going to be breaking down the week ending in 2/23/2024, right? This week's been eventful, all-time highs, markets ripping. Real quick, let's look at that larger time frame. This thing is booming. These conditions are very different. You can see, look at this. I mean, this is the 3-year, 1 week. Dude, just looks so good. Just, I mean, break above this 480 level. And really haven't been back since, right? I mean, wow. I can't believe that, Darren. It's been, what, a full month since we broke past 480. I mean, look at this. Yeah.
Since this last bull run where we had a candle like that last week that looked that bullish.
Yeah.
Massive lift to the downside.
Yeah, look at that, dude. And not only that, look at the 9D EMA and how it's respected, right? So this is like one of, hold on 1 second. Let me just turn up volumes. Okay, so this is, I mean, you guys know how much I always love going, look at this like a 5-minute chart. Look at how price is hugging the 9D EMA. I mean, this moving average is meant to really play close to the candle. And look, I mean, it's right on it. It's hugging it. It's being respected. This is what we call a healthy trend. It's very important to be able to see this. Like, look at this downtrend here. Gaps, unhealthy. I mean, it's still healthy, but it's somewhat unhealthy. This is the definition of what a healthy uptrend. I mean, one pullback in the last like 4 months. I mean, this thing's going. So, it's important though. And this happened to me Thursday to put this in perspective, right? Like, we're day traders, meaning my trades are made intraday. And just because the market's in extremely bullish conditions doesn't necessarily mean you can only see bullish chart patterns, right? And we're going to go over Friday and how I neglected a gap fill play to the downside because I was just so hell-bent on going long. And what's important too, me and Novak were just talking about this, is like being able to realize when you're in that state and walk away. And that's, we've all been there where it's like, oh, I just want to go long. I just can only see longs. I can't really understand shorts right now. Okay, I'm going to step away from the computer. You know what I'm saying? So like, trading's funny like that, right? Like, it's you have to figure out when you're hot and when you're not. So we'll break into that a little bit later. But
no, I agree completely. And before we get into that trades, I did want to mention too that this week was also challenging for me. And I guess going through my journal, the number one thing I noticed was that on my losing trades, I really felt like I knew what was going to happen. And that's the problem. It's like whenever we really think we know what we're going to we know what's going to happen in the market, even if we get stopped out, we're still going to try to enter in that direction as opposed to sitting back and waiting.
Yes.
And I mean, I seen it happen to you on Friday.
Yeah.
Me too. Like,
dude.
This week, man. And it's so crazy that, like, even if you get stopped out, it's not enough to convince your mind that something else might be happening.
Get back
you
in.
Still want to go in that direction.
Yeah. No, I'm getting back in. Just took a $300 L. Getting back in. Like, dude, hold on. And me and Novak were just talking about this. It's not the money. It's the ego, bro. And it's like for me at least, it's obviously taking an L hurts financially, but it hurts way more emotionally and egotistically. And to get to that point as a trader where you can't let it get you. I mean, without like Thursday, I had a monster day Thursday. What like insane day, killed it. Going into Friday, I think we talked about this last week too, Darren. You started getting that like untouchable mode where it's like, you can't really miss, dude. So, when you take a losing trade, are you accepting it just because you stopped out? No. When we talk about accepting the loss, I'm not talking about the dollar amount. I'm talking about, can you accept the fact that your analysis was wrong? Can you accept that? Can you accept the fact that you have all this knowledge in your brain that you've worked so hard to acquire, years of studying, back testing, pain, sweat, tears, joy, all of it. Can you accept that maybe you're still not seeing it correctly? Can you accept that maybe you don't need to see it correctly to be profitable? Can you, these are all questions that are very important. And I think it's an awesome topic for today. And more importantly though, like it's really it's game changing when you start to realize your analysis isn't what leads to consistent profitability. It's your risk reward ratio and your ability to stick to it. And obviously a bunch of other things, right? But that was definitely a big eye opener for me too, Darren. It's like it stopped out on an aggressive red candle, and just because it wicks up, bro. Like what happened is I go long on this candle, didn't get a good entry either, but I go long, put my hard stop in, get stomped out, and then it starts to suck back up. So I immediately believe I got played for liquidity. And now that I must have gotten played. It couldn't have been my analysis. The market makers must have needed my one SPX contract. They played me. Yeah, the market makers needed my one SPX contract. I'm gonna get back in. Literally, yeah. I mean, once I got back in, you hear me say, I'm like, dude, I literally just re-entered. Are you kidding? Like, and you know what though?
And you notice right away.
Yeah.
That's the thing.
And then like, my hard stop was in. It was what it was. We still made the best move on the chessboard at the time, and that was to let the trade play out. We didn't start second guessing. I mean, I could have exited. I could have done this, but I realized it's better just to let it play out, stick to whatever it was that you had in your mind, collect the data. More importantly, stomp out when you're supposed to, which I did, and live to trade another day. Right? So, yeah, it's
even when you get back into a trade like that, you tend to think in your mind like, oh, you have to let it play out exactly the same as
no matter what.
Just because still, like, you don't know the probability of this working out in your direction, in your favor. We didn't.
No.
And that's why you stayed in until your stop loss, because yes, there were buyers there. There were. 15-minute looked super aggressive to the upside.
Yeah.
And we don't know. We really don't know what it's going to do.
No, you don't. And one thing I've also realized, right, is like it's like a level of awareness, like you said, that you're playing a probabilistic game, right? You're playing a game of probabilities. Like, so even when I do make an error, like, a really quick revenge re-entry is what I'll call that. Like you said, you're still playing a game of probabilities. So you have to ask yourself, is there some sort of edge here? Did I follow it? And where's my risk, basically? And that's how it went. And yeah, so I think it was managed well. I mean, I stepped back. Market sold off aggressively. Well, really, I stepped back, and then once price came into previous day high, I was like, ooh, I like buyers here. And I literally, in my mind, I'm like, dude, I can't stop thinking bullish. I need to get out of here right now. So I just shut my computer off for the day. But we'll start on Monday. Let's see here. Oh, well, Monday was closed for President's Day. Tuesday, let me see here.
Yeah, that's Tuesday.
Tuesday, the 20th. Give me 1 second. Let me pull up my journal, see what I did here on Tuesday. Okay. Okay, so Tuesday I took one trade, and it was also a failure. Where did I get this? Okay. All right, so give me 1 second here. Tuesday conditions opening well below end of day, which was right here. Previous day low as well, all the way down here. And okay, so market looks something like this. We opened up well below some critical levels. Now, what's important here, and we talk about it all the time, is to understand the story that the market's painting. Opening below critical levels. Everything's bearish to me until we at least get above previous day low or fall into another demand zone. The trade that I took was right here. Price came down, and bearish structure really couldn't hold. Right and once again, the way I do this is I just grab the lows. So price comes down, and now I'm looking for a lower low. Right, price comes down, we make the lower low. Price comes back up, we start to see some buying. And then price comes up, breaks bearish levels right here. And now I'm looking to take a long, targeting open print. Right, so this was my first trade I went for. This is my only trade. I took the market long on this candle, and then we got this super aggressive sell-off. Boom, stopping me out of my trade, right? So once again, this is a prime example of just acting on your edge. Yeah, there's some things I should have maybe noticed. Rather large gap here between price and the 9. Not really trading off a critical level. And not to mention, we're rejecting pre-market low. Pre-market lows right here. So shouldn't have really been looking to play long up above it when we failed to get above it. It's funny, it rejected it pretty perfect. But once again, this is the importance of risk reward and not just analysis, right? You're going to put on losing trades. Got a couple of them to talk about this week. And when that happens, right, it's just cutting it very quick. And then I took this trade right here. This trade actually, this was a funny one, right? But yeah, I took this long, got stomped out. Realized conditions were rather bearish. So price came down, blew through the lows, and then we come up, and this trade right here, I wanted to target 49353. This was my downside target. And you could see here on the 5-minute, we got really extended from the 9. I literally took this short, Darren. When this candle closed green, I entered short. Had an amazing short entry on this, right? Because I'm playing to the downside, and I'm playing using that gap between price and the 9. Not really that proud of this trade, though. It wasn't off a structured level, right? It was more of only using the 9D EMA. And then price sold off almost $1, more than $1 in my favor immediately. My contracts were up well over 100% on this. And I wanted to take it down to 49353. Once again, took a loss here. So I'm trying to make up for that, like more than usual. So I'm not taking profits the way I really should have. And then within literally 2 minutes, this candle sucks up, right? And I literally only cleared about 15% return on this trade, right? So, trading SPX, this happens very fast. Am I mad at myself for not booking profits immediately? No, I'm not mad at myself for this. You know what I mean? I put on a trade, managed risk, had a target. It just didn't go my way. But what really helped me get out of that was using that structure, right? always grabbing that previous low, right? That was my first target. Obviously, if we could break 49481, and then I'd target 49353. We broke it. It's just buyers had a different plan. But once buyers got price back above 49481, right? Because this looks very bearish. Once this happens, everything changes. So yeah, it was the fastest money I ever made and the fastest money I ever gave away. It was it was so funny, dude, because I posted something in the Discord. I'm like, money shot, and I'm like up $400. Literally, Darren, within 2 minutes, all of it right back.
Yeah, that's how it goes, man. It's rough.
Yeah, so.
But yeah, as I was journaling this day, I really don't know why I didn't take that pre-market low side.
Yeah, I know.
If we're taking all these pre-market high rejects to the upside, which actually, have really paid this week.
Right.
So why did I not take this one? I don't know why. I think I convinced myself that there would be more buyers at this consolidation level, back at, this 496 area.
Yeah.
And I just was not comfortable playing into that buying. And so instead, I thought I needed to play long.
Yeah.
What I really needed to do was, maybe just sit back.
Yeah.
Maybe just sit back and wait till we get above the market low. I don't always need to make a play.
Yeah.
I think we often tend to think, okay, if I'm not to be short. It's like, no. You also can just wait. You can just wait until something, a better setup shows up. Like, you don't always have to put on a trade.
Yeah.
I think I just felt like, since I didn't want to go short, I was going to go long.
Yeah.
That's not necessarily how you need to think about it.
Yeah, that's actually a really good point. I think you nailed it on the head. Because
I took that same long, and I asking myself why I doubted the short off pre-market low.
Yeah, perfect lower high off it as well. And the biggest thing I took from this is to obviously play with the conditions of the market. I mean, we're opening below the previous low. We're opening below end of day. I was really hell-bent on a gap fill. And more importantly, I think I'd said it before, your analysis is going to be wrong at times. Did you stop out when you were supposed to? Yes. Okay, good. As long as you don't break character there, you're usually you can, I try not to beat myself up that much. But yeah, that was it for me on Tuesday. Wednesday was the day I didn't trade. I was nasty sick. I was really, really sick. So
this day
looks like I missed a good day.
I went long twice this day, and this is one of the days when I thought that the market, I thought I knew what the market was going to be. I went long targeting previous day high, and then the worst part is that eventually at the end of the day we did rip.
It happened. Yeah.
And I'm like, God damn it.
I seen that long, Darren, and I thought it was beautiful, by the way. Right here off, you took this long right here. And I thought you did an amazing job of reading that sellers were weak. Like, when I went back in the Discord and seen you call longs here, I was like, oh, dude, what a stud. I mean, look at this. This is, you got previous day low. There's a buyer here, right? Look at them. Massive big buyer right here. 49481. We're hovering above it. This was a good, you did a great job at realizing sellers didn't have it right here. I think you called longs right here, and then literally
you had a great entry on it. I did not
perfect.
Did not take profits when I should have. Yeah.
And then it rallied, and it's let's just break it down. Rallies above the high, comes down for the retest, and doesn't hold. This is actually a good topic. A lot of times this happens to me, right? Like you're in a trade and it's when do you take profits, and a dollar move, you're up a good amount, and then you give back about, I don't know, 20% of it. We have to be okay with that. You know what I mean? There's been times where I don't take profits and I end up giving it all back, right? So that's a tough one right there.
Yep, this is another example of where I knew what the market was going to do.
Yes.
I thought I knew that price was going to go up the previous day high.
Yes.
And I was acting on what I thought.
Yes.
Based on, as opposed to what I should have just taken profits,
yes.
due to my strategy.
Making decisions based off what we're seeing, not what we think. Dude, that's so powerful, dude, because that's what I every day that I don't have that's good, I'm trading because of what I think the market's going to do, not what it's doing. And there's two completely different mindsets right there. There's a mindset of I don't need to know what I'm looking at. And then there's a mindset of I need to understand what I'm looking at right now, right? See, when you don't need to know, you just sit back and wait, the trades come to you. You'll know when you see it, right? That's one of my main mottos I've written on my desk is I'll know it when I see it. I don't need to know it right now. I don't need to understand right now. But when I see it, I'll know it. And it's so true because it's some of my best trades, like flow state, just in and out of the market completely. I'm not looking for anything. It comes to me. You know what I'm saying? So
yeah.
It was a really good trade though, Darren. I thought, I agree. I was blown away but once again, that's the game. And then to see it come right back, of course it did. You know what I mean? That's
I think what happened here is I really think that the market was waiting for NVIDIA news.
Yeah.
And that's when the NVIDIA news came out right there.
Yeah.
I think, right there, yeah.
FOMC came out right here as well.
Oh, so this could have been more, this could have been more reasons why the market was just sluggish.
Yeah.
And I don't know.
Yeah.
I don't know. We can't, we don't trade off of fundamentals that much. But, what we can do is realize, okay, if the market's waiting for something, we might as well just take profits.
Yeah.
It's a difficult
one.
Yeah,
it is. And that's another thing, right? Like the 9, at times you get that extension, it's like you make that decision of, okay, am I going to see how this goes? Like when price is extended like that, it's usually a big flag for me to just book it. But in the past that cost me a lot of money just booking it. Right. So it does. I mean, there's days like Thursday, I'm going to show you where, this trade made me around, like 300, there was $300 on the premium on this trade. But if I held it longer, I would have made, infinity. Right. So it's like, where is that sweet spot? And once again, right, that's where that risk reward comes in so much. Like being aware. Like a big one for me is like when I go into trading day, some of my most consistent and profitable months and weeks is I go into the day like, okay, I usually make X on my premiums, or my risk reward. What works for me is 250 on my premiums or on my contracts profit. So once I get around that number, I tend to ask myself, okay, what's it worth to stay in this? Right. So but it's hard because it can limit you. I've yet to find the best.
I love that there's no concrete way to do this.
There isn't.
There isn't. No, there's no right way.
Yeah.
And there's no best way. There's no one way that will work in all scenarios.
No.
But the thing is, as we build our skills and, as we're trading for longer, we tend to think that, if I've seen the market do this so many times in the past,
yeah,
to do it again. But I think what we're forgetting is that every single moment in the market is completely unique.
Yeah.
And just because you've seen something happen before, you can't overweight that material in the market. You have to realize that every moment is unique.
Yep.
And, if you identify your edge, you got to reward this.
Yeah.
I know I say it a lot, but I think we tend to think that we're smarter than we are because we've been trading and we've seen, I know what happens when this happens.
Yeah.
But I think it usually comes back to bite us.
Yeah, you actually summed that up perfect. It's so true. I like Mark Douglas said it too, right? He's like, when you see your edge, you reward yourself. Like all what an edge is a higher probability of one thing happening over another. That's it. That's all what an edge is. An edge is a scenario where there's a higher chance of one thing happening over another. When you see that edge, you act on it and you manage risk. And more importantly, you manage your profit. So yeah, it's definitely one, yeah. It's profit taking is definitely challenging. Thursday was an amazing day. Thursday was an amazing day. I want to break down the 1 hour, the larger time frame, and what led into this mega rally. So the biggest thing for me, Darren just said it, right? The fundamentals we don't play often, but I have to ask myself, what's making the market rally, right? So when we're coming into a critical level, right? All-time high was 503.42. I ask myself, how are we approaching this level, right? Because, the old Josh would have been like, okay, we're coming into supply, we're going to get selling. Not necessarily. The seller that's here back on Monday of 2 weeks ago, he's trading a different market than he is this day. Well, what makes it different? Well, NVIDIA is, they're selling $50,000 microchips to Google and Facebook, and they're just killing the market, and they're making tons of money. Now, this adds a lot of money to the overall market, right? And it increases the conditions. So more importantly, FOMC came out on Wednesday and the market responded relatively well to it. So when we're coming into all-time highs, this is where my larger time frames really do a lot for me, because we're gapping into it and we're actually opening above it. So what I was looking for here, I took a trade I don't usually take on this day. I want to break down what led me to take it. So I had that all-time high level at 503.42. And you could see, look how it was respected in pre-market. I mean, seller was there perfectly. We broke past the seller. We're retesting, right? So seeing a level be respected is always a clear, if you see activity at the level, it gives it value, right? It's telling you that it's, there's a battle going on there. So when we sold off below it, initially I was relatively bearish, but it's just one red candle, right? So I'm going, okay, we sold off below it. What's it going to take for this chart to prove to me buyers want this? And in my mind, I'm going, if sellers can't respect the retest at 503.42, I'm going to enter this long, right? So when we ripped above 503.42 and then we found acceptance on this candle, right? So in my mind on the retest, I'm going, okay, I'm looking for a wick, right? I'm looking for some sort of rejection here off 503.42. We didn't get it. We actually closed above it, invalidating this bearish structure that was formed. So on the next candle, when this held above it and closed like this, I entered the market long, right? With a stop loss below the lows. Once again, I rarely trade like this, but I was trading the story, right? And I felt really comfortable trading it. Like I had the 1 hour looking like it did. We were dipping below into that level, right? We were getting that break into it, and it was starting to suck up. So I was willing to put risk on the table there. And once again, I was just playing like how price was reacting to the 9 DEMA as well, because at that time, the 9 was above it. So in my mind, I'm going, okay, we're below the 9, But in a bullish scenario, we're going to get back above it. And if we do get back above it on the 1 hour, this thing's going to get legs. So I took it long initially and captured a really fast move, right, from here all the way up to here. Once again, we were really extended from the 9, so I booked the profits. Quick scalp to the upside, just playing the conditions of the market. And I really like that trade. I like that I was able to really act on, my edge. Once again, what all the edge is a probability of one thing, a higher probability of one thing happening over another. So what really gave me my edge was that sellers could not defend that retest. Boom, ripped up, came down to pre-market high here for a retest. This is where I then got back into the market, right? And once again, I'm playing this initially off the 1 hour time frame. And I understand we're above all-time highs. The market needs it needs to accumulate its buyers and sellers, but I was just willing to put on risk here. I mean, once price came down, respected it, put on risk, and then she ripped up.
Added there?
Yeah.
You added to that point?
Yeah. I got in this. I booked. So my first trade, Darren, was from here to here. So I got out of my first SPX trade right here. Got in, out, boom. Then price came down, tagged the 9 and pre-market high, and then I got in another trade. And then
I that pre-market high retest.
Yeah.
It worked so well.
Oh. Well, in those conditions, dude, you have to remember you told me a while ago, right? Because I used to kind of hesitate on these trades. I'd be like, oh, do I take it? Do I not? I've been burnt. Right. And then Darren was like, dude, you have to reward yourself for seeing your edge. Right. I think that's a big thing for traders because, we do get burnt. We see our edge. We go for it. It doesn't work. And then we start to feel a bit betrayed. And then we start to look for more. I need more confirmation. And what that does is keeps you from acting on your edge. And then you overthink it, and then you end up screwing it up. So this was a good day where I was like, you know what? If this comes back down and touches it and I see buyers, I'm in it. And there was a bit of a struggle right here for a little bit. And then she ripped up. And then once she came down and closed below my 9, I was really good here with booking profits, got out of the trade. Because more importantly, I knew. Listen to me, I knew. I didn't know shit. I had a feeling that this was going to have legs if we could hold. And I got back in the market on this candle right here. And I ended up holding this pretty much the whole day. This was a really good trade.
Yeah. Yeah, I think so. I struggled with profit taking there because I took it long right there. Bam, that candle that you're on.
This one.
And I did not take profits. Yeah, I did not take profits right away, and I gave over half of them. I was thinking do I really want to hold till pre-market high? In my mind, pre-market high, it's a good level for accounts, but that would be that wouldn't been drawdown for me. I was in SPX, so waiting to pre-market high would have been a serious drawdown.
Yeah.
And so I just ended up making just over break even on that trade. I really wasn't happy with it.
Yeah.
But that's just something that I gotta improve on.
Well, what's good?
And I think trading options, it's easier to hold through these pullbacks, which is why SPX has been difficult for me for the last couple of weeks.
Yeah.
In options, I think I would have been able to weather that little pullback, the pre-market high.
Yeah.
And still obey my regular risk.
Yep.
But not SPX.
No.
Time decay is
a
lot more on
even
SPX.
Even when I got back in this, Darren, I got back in it I got back in SPY contracts, right? I traded this SPX right here, SPX right here, and then right here I traded SPY contracts because I was I have a feeling this I went into this wanting to hold it. And that time decay, SPX is definitely not made to 0-day hold. it's
No,
it's
quick profit taking.
yeah, it's like it's more of a scalper's tool. I mean, it pays extremely well, but I don't know. Maybe that'll change down the road. But I really like this day. I like that we could not get below pre-market low or high, and I took the market long again on this candle. And then she just started to rip, and I was just in that mode of complete acceptance. I was like, dude, I'm holding this. Like, looking at the 1 hour, I was like, I don't care if it goes against me. I'm holding this. Like, and this thing ended up ripping. I ended up making almost 400%, actually a little more than 400% return on this trade. It was
Banger.
yeah, it was a monster. It was a monster trade. This candle knocked me out. It was an amazing trade. Yeah. I was and I was doing what we did on the options chart where you just pull up the stop, and it's
to the next structure.
Yeah, it feels really good too.
I think it's much easier to do that on options, is to move up your stop like that. SPX, I don't usually have a stop. I mean, I'll have obviously a hard stop, but a profit taking, I'm just having a finger on the market, and as soon as it gets to a certain point.
Yeah.
But with options, I'm much more likely to bump up my stop like that.
Yeah.
And I think I don't know why it is, but I think SPX, the pullbacks will just knock you out, man. They'll knock your trailing stop.
Well,
it's not really a trailing stop. If you're moving it up, I think you'll just get knocked out.
Well, it's the truth, and not only that, right? Like, the volume also affects the premium heavy on SPX. Like that implied volatility can make you tons of money, but it can also hurt you. So how that works, right, is if there's a lot of buyers buying those premiums at a specific area, the premium is going to go up alone without price moving. But on those pullbacks where buyers aren't buying, you also get hurt on the IV, the implied volatility. So it's like those pullbacks literally will cost you, 30, 40% at least. And then if the price doesn't come back, I mean, you have to be, and that's where you ask yourself, if I'm up, 60% on a trade, let's just say, 60%, am I willing to pay 50% of my, or 90% of my profits to see if this is going to keep going, just to see if I'm right? And that's one thing SPX has helped me with, is like being like, listen, it's not up to me to be right. It's up to me to make money. So like if I'm in an SPX trade and I'm up 60, 70% and I'm extended from that 9, I'm just taking it. I don't care. Boom. Profit, risk reward's been hit. Good. Let's go on to the next. And like, it's like that acceptance where it's like, dude, I'm here to make this money and to follow my risk reward ratio. Like me and Novak were just talking about how important that risk reward ratio is. See, the only time we get inconsistent results is only two things can happen. Our win ratio is lower than what our risk reward can actually accommodate, or your risk reward, you're not following your risk reward. Like that,
based on your win rate.
Yeah. Like, I mean, my win ratio, my risk reward is like 1-1. Like literally, I literally risk 200 to 250 to make 200 to 250 on average per trade, per contract, right? And okay, that's fine. But the day that I don't follow that is the day I lose consistency. It's crazy. It's like, it's not your strategy. I mean, obviously, like, strategy helps make you more money, right? Better strategy, the more money you make. But once you start to really highlight what risk reward, how big of a tool it is to follow, it's really like, it's unseeable. I mean, like, Darren, I mean, you really helped me realize this when we talked about the quarter, right? Where you can flip a quarter, but you could be profitable on a coin flip with a 50-50 win ratio as long as you make a little bit more than you lose, right? So it's like, what gives that power is actually sticking to it, though. If you don't stick to it, it loses all power. It's easy to be like, oh yeah, my win ratio's 1-to-1, when you're winning, but talk to me when you're taking losses. Are you actually following it? If so, then you can see consistency. I just think it's so cool how it's actually a tool. Like, it's not a guideline, it's a tool. You know what I mean? Like, it's critical.
Yeah, 100%. I'm always messing with my risk to reward, just because, as I started trading SPX, I realized that I needed to take profits quicker.
Yeah.
But that also meant that I wasn't holding to my 1 to 3 anymore. I was
Yeah.
mainly holding to like 1 to 2.
Yeah.
So now that means that my hit rate's got to go up.
Yep.
Because if I'm not making 1 to 3 anymore, I need a higher win rate.
Yes.
And so I go back and look at my stats and I ask myself, is my win rate increasing? Am I seeing more opportunities now that I'm only taking 1 to 2 and allowing, $200 loss instead of 150?
Yeah.
And if those things are playing out in my weekly statistics, then what I'm doing is working. But if they're not, then I have to figure out what I need to change.
Yeah. Well,
and I've tried SPX for a little bit, and for whatever reason, it's just not working as well as options were for me. So it's like halfway through last week, I went back to options, and I'm just seeing, what changes. Seeing what changes.
Yeah.
But above all, if you can't control your losses and you can't stop out, none of this works.
Exactly.
So the very first thing you have to do is to be able to stop out.
Yes.
If you can stop out consistently, then you can start.
You can become consistent.
Other factors.
Yes.
Yeah.
It's the truest thing in the world, dude. Like, once you learn it's crazy because you look at all these traders. I mean, some trade oil, some trade futures, some trade SPX, some trade options, right? Everything's different. All those variables are different, but the main variable that stays the same with all consistent traders is that they actually stomp out when they're supposed to, right? Like, that right there is undeniable. If you can't do that, right? And I'm just saying this to reinforce to myself, right? Like, if that is number one, right? I don't care. There's no breaking that. But this is the thing. If you can stick to that, you can become consistent. You now have the groundwork of making consistent money. Anytime you're getting inconsistent results, I want you to look at your results and go, am I stomping out where I should be? And if you cannot say yes, that's where your issue is. I promise you, it's crazy. Does that mean consistency is a hard stop? It's the beginning of it. Like Darren said, if you can learn to implement the hard stop, then you get to advance and start to look at, oh, well, maybe I could tweak this, tweak that. But that is really well put. That's why a lot of my trades have been a lot different on SPX. Trading with the 9 very close, very tightly. It's definitely makes it different. But it's very personal. It's just it's like knowing, like I said, right? I took this long on SPX, then I took my second long on SPX, but then my third long, I was like, no, I'm trying to capture a larger move here, so I'm going to switch to SPY options, right? It's just being aware. It's like using the right tool for the right trade, right? It's like, it doesn't have to be, oh, I'm only going to trade this, or, oh, I'm only going to trade this. It's what's in front of me and what tool do I need to capitalize on it the best, right? So it's like, it's just another tool in the tool bag.
Yep. I think once, so there was a point in my trading when I still had these losses which were way over 30%. If you're having those losses still and you're having huge drawbacks, there is no point in trying to fine tune these other risk to reward and 1 to 3 risk to reward.
Yeah.
There's no point even focusing on those things if you still have the ability to let these huge losses affect your account.
Yeah.
Nothing's going to work if that's the case.
No.
Nothing's going to work.
Yep.
So you first need to rid yourself of these huge losses. And once you've done that, now you're in control of your downside.
Yeah.
Now you can start looking at the finer details.
Yes. It's so true. It took me so long to figure that out, Darren. It took me years. I always thought I was special. I always thought, it came back to me that one time. It came back, and the market's going to do that. You're going to get lucky. And this is the thing, your ability to realize you got lucky is the only thing that's gonna help you get like not do that again.
Oh my god.
When you get
that's the worst thing is when you put on a banger trade thinking that it was something to do with your analysis. You it's like no. That's not how it works.
No.
Like you were in the right place at the right time.
That's it.
Abilities lined up.
Yeah.
It had nothing to do with you being smart or you being a good trader.
No.
My little sister and my grandma could put on that trade.
Yeah.
Just click the button.
Yeah. Exactly. You're not important. You're not special. What makes you special is stomping out when you're supposed to. It took me so long to realize that, and now it's non-negotiable, and SPX has really helped me not play around with that. Risk reward is everything. I don't care if it's 1-to-1. You're not a bad trader if it's 1-to-1. Just make sure you can accommodate that, right? And go from there, and don't think you can't get the data to prove it. You know what I'm saying? Well, like do it for a month.
Undeniable proof.
Yes, do it for a month of this is my data, this is how I'm doing, my win ratio, and you'll see it. You'll literally see it. Like when you look at your data and go, oh dude, last month I have a 73% win ratio with a 1-to-1. I risked 100 to make 100. Oh wow, I'm consistent. Like you'll see it. You know what I'm saying? It's so wild, like that. And then if you're not, ask yourself why. Did you size up too much on Wednesday just because you wanted to make some money back? Like that's why I'm so I make all those videos about position size. Like if you alter your position size just because you lost some money, like I did the other week, that's going to skew your results like no other. You know what I'm saying? Like, I don't know. Some traders do it. Some traders do 100, 100 contracts here and then 20 here. For me, it's every trade is going to be the same, right? Because that's something I can control, right? I could use that as a tool to develop consistent results. See what I mean? That's not saying I'm never going to size up. It's saying when I do size up, it's calculated, right? And then every trade will then be that. Right? You start to realize these little disciplines become strengths. So, it's position size. If anyone ever needs to talk more about that, do not hesitate to message me or Darren. It's very important. It's literally
I'm so glad we're talking about it.
Yeah.
It's before really any strategy or
any analysis.
Any of that. These fundamentals.
It's true as day. Like, and for so long, I didn't see it, dude. I didn't see it. It was like I would hear people talk about it, and it would literally go in one ear and out the rest. And I had horrible results, but I was like, no, it's got to be the analysis. But okay, so I mean, perfect example, right? Thursday, 2 amazing trades, right? Going to Friday. See, if I didn't have proper risk reward, these 2 trades would have wiped out all this money. See what I'm saying? Like if I traded one contract here on these trades and made $1,000, but then jumped up and traded 5 contracts on these trades and lost, I would have lost maybe $1,200 instead of, you know what I'm saying? So instead of trading, making $1,000 this day, and then on this day losing, I don't know, $400, right? That's the difference. So, find out what works for you and then stick to it. So open print, we were very bullish. I let that 1 hour oversell me. I was so bullish. So all I could see was buying, and I played right into my own emotions, and took the market long here once price closed above the 9. No structure. Oh, my bad. It was off pre-market high. So there was that. I'll give myself that. It retested pre-market high, closed above the 9, along the market, got stomped out immediately. Like a couple minutes later, not even. And then the candle started to suck up. So I immediately assumed that I was still right. I was just got unlucky in large money, needed my one contract of liquidity. So I got back in the trade, hoping to obviously make my money back, and then ended up getting stomped out and walked away for the day. So that was a big one for me, man. I needed this. And it's funny because the day before, Darren, I had a like I said, I had a pretty monstrous day. So like going into this, I needed to be toned back a bit. You know what I mean? And I think I needed this air to help shed light on needing to be right. You know what I'm saying?
Yeah, the market will always humble you when you need it.
Yeah.
Every time.
Every time. So crazy. But yeah, that was it. Darren, you took a short play. Talk to me. What was going on?
So I saw that that 510 level. Remember when we
Yes.
went up to that
Yes.
510 level?
And I literally said there's a seller there.
Yeah, and so I saw that, and so I didn't forget about it. And I remembered, I seen price come up, still couldn't break that 510, even though we went a little bit above it.
Yeah.
I drew a little supply zone around that little block at the top, that block of candles. Drew a little zone of resistance, and then I watched the 9. So with that in mind, with thinking, okay, there's definitely somebody there, there's definitely a seller there. Then I'll watch the 9.
Yep.
And you know how when we get extended from the 9 to the upside, and then we come down and wick into the 9, and we cannot close below it.
Yeah.
Then we're still bullish, right?
Yeah.
And so I just use that same analysis to the downside, and I saw us come cross above that 9, right on the 10-15 candle.
Yeah.
And I let that candle completely close, and as soon as it closed, and we whipped back up to its open, that's where I got in short, and my stop was the top of that candle.
Wow.
Which happened to be 510 pretty much exactly.
Yeah.
And my target was previous day, and I did not move my stops. I left my stop exactly where it was.
Such a good
trade.
trade.
I was trading options.
Yeah.
Here I was trading options, so I scaled out, my various points. I think I had one scale out when contracts moved $25. When contracts moved $25, and then I took another one at 1 to 3, and then I took my last 3 1 to 4, which was just above just above end of day, and that was it.
Such a good trade.
I got that. It was small size, so it didn't necessarily. This is the problem: is when you switch up the size.
Yep.
And I know we talked about this before, but if you have a winning trade but it's smaller size, all of your losing trades from a large size, it's not necessarily going to
change anything.
It's not necessarily going to take account for those losers.
Yep.
So I realized that I was susceptible to thinking, this winner isn't accounting for all of my losses. I should hold on to it longer. I should stick to my process. I should stick to my 1 to 3, even if it's with swap.
Yes.
And I'm just really glad that I did that. And yes, that win did not cover the normal 3 losses. But what I did do is I did not think about that at all.
No, doesn't matter.
This trade exactly to do with just scaling out when I should, hitting on 1 to 3, and a 1 to 3 perfect.
Yes.
And I was happy with that.
One good trade. Good trade.
Yeah. Exactly. Just think about how you're gonna manage this one trade right here.
That's it. Bro, that's phenomenal though. That's literally the goal. Like you could not have finished the week any better. Like, you brought up something really good that we'll hit on before we close is like, I mean, Darren, he's like, yeah, it's low size and I want to make more money to account for, some losses I had earlier in the week. But you didn't make that You didn't let that break your character. You didn't let that go.
I
Oh,
didn't act on it.
yes, you
I
did.
realized I was susceptible to it, but I did not act.
You observed your thoughts, not acted on them. You observed them. That's alchemy shit. That's really that's really good.
Dude, seriously.
Yes, it's really important as traders. That's where we need to be. We need to be able to be like, okay, I'm thinking stupid right now, and or I'm thinking something that's not aligned with my true goal, so I'm not going to act on it, right? Like even though, like, going back, I put on 2 trades here that were unprofitable. Second trade, I didn't like how I acted on emotion, so I removed myself from the equation, right? We have to be in control of ourselves, even when we can't control our minds, right? Red flags need to go up. Sirens in our head need to go off. We need to be like, okay, listen, this isn't the regular Josh. I don't want to trade right now, right? Like, and it's crazy because your conscious tells you, when you're not thinking right. You do. It's weird. It doesn't feel right. You're forcing. It's wild. I don't know if it's just through a lot of meditation and like self-awareness, but like I now know when I'm not when I'm not feeling right. I could feel it. I could sense it. And it's like, okay, I'm not in flow state. I'm just going to step away, and that's fine. That's fire though, Darren. That was a really good job using the 9 there. Like, that's how you're supposed to use it. I like how you use what we usually do, but in just a bearish way.
Yeah.
What, you let price come back into the 9, rejected it, and then retest it and go short.
Yeah, and I knew there was going to be a lot of buyers that were going short. I mean, that pre-market high retest is a particular setup. Like, we're not the only ones that use it. I see a lot of people on Instagram using the pre-market high strategy, and it has a certain win rate. It has a win rate, and you have to realize that when that gets broken, there's going to be an imbalance. There's going to be people stopping.
Oh, yes.
And, as I watched the candles form, I was asking myself, am I seeing this play out? Am I seeing what I think might happen play out?
Yeah.
And if I'm seeing signs towards it, then that's confirmation to stay in this trade or put on risk and stay in until it's proven, incorrect.
Yeah. I think about it, dude. I wasn't the only person going long here. There were tons of traders going long.
Oh, yeah.
Now, what?
Candle wicked up huge.
Yeah. Now, what's it look like if sellers have more strength? Can't make a higher high. Can't break the 9. If you can't break the 9, it's for a reason. See, that's where one place I went wrong. Not on the first trade, right? Because we closed above it, but like we couldn't get back above the 9. I should have. That's where I'm like, oh, more patient. Let's see if we could get back above it or play to the other side. You could see that 9 was a wall. Boom, boom, boom. Mega sell-off. Such a good trade right there. That was it.
Yeah, I always like the way that we sit back and we say, okay, I want to see sellers try here, right?
Yes.
So, like, on that day, we want to see sellers try to come down and bring price below open print, and then we want to see what happens.
Yeah.
And when sellers came down, now we want to say, okay, how are buyers going to respond to these sellers trying to bring price down? And then, if those buyers cannot be stronger than those sellers, then those sellers are likely going to win out in the end.
Right.
And that's, that's what happened.
Yeah. Yeah. And just being able to see it. All right.
I don't think that it was anything that special that I did.
Just present moment.
I guess I was just in the right, I was in the present moment. I was in the right place at the right time. I identified my risk correctly. Yeah. And the rest was just history.
Well, that's literally what makes a good trade, bro. Is you're in the present moment. You're not, everything you did, everything that led you to take that trade was off the information directly in front of you. It wasn't in your mind. You weren't going, oh, well, conditions are very bullish. I shouldn't not do it. Right? That's a big one. That's a really big one that I think we talked about right in the beginning was, yes, conditions are very bullish, but be aware of who you are and what you're trying to accomplish here, right? Just because conditions are supremely bullish doesn't mean sellers aren't going to be in control today. I don't care. It's what's in front of me right now, right? That's going to lead me to put on a long or a short, right? I'm not going to lie. This year I've been playing a lot of long. So like, at times you get that confirmation bias where you have to see only buying, and we have to be aware. I don't care, what bias you are. You have to start, getting rid of that bias, because it's going to limit you. And, because your brain will literally only see what it wants to see. So that's using that 9, using those levels, and, trading the patterns off them. So, all right, guys, I got to go. This has been a great recap. I'm going to post this one, YouTube. It'll be up in a little bit. Thank you, everyone, for showing up. Go through your journal this weekend. Dive into that risk reward. I'm telling you, it completely changed everything for me. And you'll soon realize it's a tool. So, and if you've got a low one, right? If yours is like a 1-to-1, don't beat yourself up. That is profitability when traded properly. So, find what works for you and work it.
All right. Have a good weekend, everyone. Enjoy the sun. And I'll catch you next week.
All right. Peace.